Now that we've covered what defined outcome ETFs are and how they work, let's turn to the most important question. Why buy one? At their core, the ARK Defined Innovation Exposure Term, or DIET ETFs, are designed to give you exposure to the same disruptive innovation ARK is known for, but with a clear sense of your risk-reward trade-off from the outset. So you're accessing the same research, the same transformational companies, and the same potential for exponential growth, but you're doing it with a structure tailored to your risk tolerance and your return objectives. While most defined outcome strategies focus on broad market indices like the S&P 500 or the MSCI World, this one is built around innovation. So it's innovation on your terms. Some investors want full exposure to innovation with no caps or buffers, and that's what ARKK, the ARK Innovation ETF, offers. Others want a more predefined approach. That's where this ETF suite comes in. And because these are ETFs, you also get the full advantages of the ETF wrapper. Daily transparency into your holdings, the liquidity and flexibility of ETF trading, and the operational and tax efficiency missing from traditional structured products. These ETFs can serve as an accessible, lower volatility complement to higher risk equities, while still offering exposure to disruptive innovation and the potential for uncapped upside. So in portfolio terms, that makes them a powerful middle ground, more growth-oriented than bonds or cash, but with lower beta and volatility than direct equity positions like ARKK. Think of them as a tool to bridge the gap between traditional defensive assets and high-growth equities. They can help smooth out the ride without stepping away from your conviction in innovation. Whether you're looking to reduce overall portfolio volatility, or create a glide path into or out of innovation exposure, or substitute structured notes or bespoke hedging strategies with something simpler and more transparent, the ARK DIET ETF suite offers a flexible solution. And because they are ETFs, they avoid the operational complexity of traditional structured products. Put simply, they let you position for innovation with a defined risk profile that's easier to integrate into a diversified portfolio. If you're an investor interested in technology or the future, defined outcome ETFs may be perfectly positioned for you. They round out the ARK lineup too, giving our investors a fuller range of tools to express their conviction in innovation across the entire risk spectrum. We hope this series has helped demystify this new ETF suite. If you still have questions, check out the full FAQ page. Thank you for watching, and as always, we hope you invest on the right side of change.